Hey guys, so investing in the stock market is never a one-size-fits-all strategy. It's all about you finding something that will work based on fundamentals and technicals. And there's so many strategies and styles in the stock market. In this video, I'm just gonna show you four strategies, 4 styles to give you the right information for you to be able to research further. Please do note that in the world of trading and investing, it's all about fundamentals and technicals, knowing how to select and knowing how to time. And I hope this video gives you the right information, because at the end of the day, you have to find what will work for you. It's never about what works for me will work for you. It doesn't work that way. You have to find the sweet spot in between, using technicals, fundamentals, your style, your strategy, your risk tolerance, your timeline, and the capital that you have. And that's what I hope you get from this, that you find out what will work for you, because what will work for you is what will make money for you. So enjoy the rest of the video.
If you want to be a position trader, the goal is to find stocks after they have been battered down, they've started to consolidate for a bit, but you don't buy there. You buy them after they have consolidated and have started to break out and have started to reverse. The thing about that narrative is, if you buy stocks that have broken out and have started to reverse, they're not at the cheapest point possible. But the goal at the end of the day is not to buy at the cheapest point possible if you are a position trader. The goal is reversals. The goal is to find stocks that after they have been battered down, they start to reverse and start to go up and move at a very fast pace. If it does not fully reverse, you must sell and cut loss. This is not a foolproof strategy that you won't lose money. You have to remember, every time you trade and invest in the stock market, if it does not go the way you want it to be, there will have to be a point where you have to cut and sell. The goal, again, of every time you want to be a position trader is basically this. If the trade is not going on your behalf, sell, cut loss, but lose a smaller amount of money. But when the trade is working and going towards what you want it to be, you hold and maximize your position, and that's how you win, and that's how you can do it over and over and over and over and over. You can actually make money in the stock market by just holding it and getting passive income for life. And this is very good, because I know a lot of people don't want to trade, don't want to buy and sell, but they still want exposure that will give them higher returns than what they get from their time deposits or bonds. Or if you are not entrepreneurial, this is for you, because it can give you returns that are much higher still, and it can give you income, not just now, but it can give you passive income repeatedly over the long term. So how does it work? It's what you call dividend investing. It basically means you buying stocks that have dividends, that give dividends on a regular basis. Dividend basically means excess earnings from the company after removing all of their expenses and all of their projects they will use for the next year. This is surplus money that, instead of them storing it in the bank where it doesn't earn much, they're there to give it back to you as an investor. So there are a lot of companies that are good, that are growing, that apart from what they have used for their expansion, they still deploy it back to investors. So this is very good. Why? As a long-term investor, the advantage of that is basically this. If you are investing in the stock market for the long term, a company that has dividends is a company that basically is a good company. Why? Because they're not just earning, they're earning more than enough that they can actually return and bring back and give back some of its returns back to investors like you and me. So that's what's amazing about it. You can just buy the stock, and as long as they're earning and as long as they're giving out dividends on a yearly basis, you can hold on to them up until you want to stay away from the market already. So that's why it becomes passive. That's why it becomes investing for the long term on a passive level, which still beats time deposits, which still beats bonds, and which gives you an exposure to an extra level of earnings. Why? While you are getting dividends and you are holding it, as long as it's a good company, it still gives you a potential that, hey, the stock price can go up over a period of time. So that's what dividend investing is. The goal is to hold on to it, to stay in the company, to stay invested, until it still gives you dividend on a regular basis, you don't need to sell it. So the only time you sell is if you see the dividends start to diminish, if you see the dividends start to change, or if they stop giving dividends out completely. But until that happens, you don't need to sell. You can be a passive investor. You can make money in the market by not watching it every day, but still beat inflation, still beat time deposits, and still beat bonds out there. So this is one way for you to win, and this is one way for you that even if you're busy with your job and with your business, you can still be invested in the stock market and get better return. The good thing about buying stocks with dividends is that since they are good companies that are growing and that are earning, majority of the companies that have given you capital appreciation from Ayala Land, Jollibee, Ayala Corp, Globe, don't just have dividends, but they also have capital appreciation for the long term. What's nice about that is this: as the stock price is increasing, guess what? Your dividends are also increasing. And that's what's nice about it. Above and beyond the yield, above and beyond the percentage yield that you can get per year, it's also the earnings that you can get that's proportional to the stock price. So as the stock price goes up through the years, you can expect also that your dividend yield will also go up over a stretched period of time. So if you want to invest via dividends, here are a couple of things that you need to look at to know if the company that you are investing on is something that could give you a good return in the future. Number one, look at the company and the dividend that it gives out on a regular basis. It has to be something that's consistent yearly, that the dividends that they are giving out on a yearly basis is almost the same, or if not the same, it should be increasing. This shows you how good and healthy the company is, that they're actually earning more than what's expected, and they have extra amount of income that they can give you on a regular basis. Number two is the dividend yield. Dividend yield basically is the dividend divided by the stock, the price of acquisition, or the price that you bought the stock. Meaning, the lower you buy the stock, the higher your dividend yield will be. So this can be your comparison, that if you get a dividend yield of say 5% up against a time deposit that gives you 2%, you are getting a higher yield, a higher rate of return. So the technique here is this: the lower the stock goes, the higher your dividend yield will be.
Yung sinasabi ng peso cost is maglalagay ako, mag-i-invest ako sa stock market, sa UITF, sa mutual fund, sa VUL, regardless kung ano man yung asset class na yan, on a regular basis. Ang sinasabi ng peso cost averaging, yung regular basis na yan, depende sa'yo. Gusto mo ba maglagay every week, every 2 weeks, every month, every quarter, every 6 months? Peso cost average says that on a regular basis na kung ano yung dinefine mo na regular para sa'yo, yun ang ilalagay mo, yun yung iuhulog mo. Ano nga ba? Magkano nga ba ilalagay mo? Depende na rin sa'yo yun. Ang peso cost averaging, hindi siya mandatory na ito dapat ilalagay mo na amount. It depends on you. So meaning, kung sobra mong pera lang 100 pesos, di 100 pesos lagay mo. Kung sobra mong pera 1,000 pesos, di 1,000 pesos lang lagay mo. Kung sobra mong pera 5,000 pesos, 5,000 pesos lang ilagay mo. And I've been saying it all the time, yung tulong din naman talaga ng investing is dapat maglagay ka ng amount of money na kaya mo. Yung pinakatulong ng investing is dapat it's an amount of money na kahit mawala siya, buhay ka pa rin. It should be an amount of money na kahit anong mangyari, hindi mo siya magagalaw. At yun yung pinaka-strength nun. So, peso cost averaging is a fixed amount of money, 500, 1,000, 2,000, 5,000, 10,000 pesos, na kaya mong ilagay, kaya mong i-invest on a regular basis na hindi mo siya gagalawin. Yun yung pinaka-strength niya. Nakakalimutan mo lang. Please remember this, sa kahit anong investment na sinasabi ko, sa kahit anong investment na tinuturo ko sa lahat ng mga tao, kailangan yung ilalagay mo yung amount na pag nawala siya, hindi ka masasaktan. Kaya dapat yung amount, madali kasi mag-isip na sige, lalagay ko malaki para mas yayaman ako agad. Pero kung masasaktan ka doon, kung hindi mo siya kayang i-tolerate din, it's not an amount of money that you should put there. So, you have to decide, every 15, every 30, every time na may sweldo ako, maglalagay ako ng 1,000 pesos. Every 15, every 30, kada may sweldo ko, maglalagay ako ng 2,500 pesos. Ngayon, saan siya maging effective? Effective ang peso cost averaging for long term. Meaning, you will see the benefits of this when I say long term. At the very, very least, 10 years. It should not be less than 10 years. If you are looking for something that will benefit you in less than 10 years, maybe peso cost averaging is not the best avenue. So, you're saying, paano yun? Meron naman ako naging investment, nag-peso cost averaging naman ako, pero 4 years pa lang kumita na ako. It can happen. But what I want you to say is to manage expectations, dapat at the back of your head, you should not take it out. Hindi mo dapat siya tatanggalin in less than 10 years. If 20 ka, dapat hindi mo siya tatanggalin above 30 years old. Dapat more than 30 ka ba bago tanggalin yun. Pero eto, kung 20 ka, dapat iniisip mo 40-year time horizon. Iniisip mo, since bata pa ako, I have the ability to put in more money and I have the ability to take in more risk and I have the ability to let this grow. Kasi yung pinakalakas ng investing, imagine this, kung pinalaki mo yung pera mo ng from 20 to 60 years old, 20 to 40 years old, then yung years of investing mo, sobrang laki, sobrang lalim, sobrang daming chance for you to make money. Yung inisip kasi ng tao, get rich quick, inisip kasi ng ibang tao, ang tagal naman, 3 years, di pa ako kumikita. Hindi eh. What if on year 40, yung pera mo biglang, boom, lumaki ng sobra? You need to manage your expectations. Kung gusto nyo mag-peso cost averaging, at the very least, 10 years. Kung kaya nyo, 20, 30, 40, even better. Ano yung pinakatulong pa nito? Yung malaking problema sa Pilipino, walang disiplina eh. Yung tinutulong nito sa Pilipino is, kada sweldo, may tinatabi ka na amount. Yung tinutulong nito sa Pilipino, kada sweldo, kada time na meron kita, hindi lang siya na tinatabi mo, na linalagay mo, di mo rin siya tinatanggal. Yun yung pinaka-strength ng peso cost averaging, and that's what I want to suggest to all of you as well. Kaya sinabi ko nga sa simula pa lang, dapat yung ini-invest nyo na pera, it should be an amount of money na hindi nyo ginagalaw. It should be an amount of money na kahit anong mangyari, hindi mo siya gagalawin, hindi mo siya tatanggalin, hindi ka kakabahan kahit anong mangyari doon. Yun yung pinaka-strength doon. Yung disiplina na number 1, naglalagay ka, hindi lang naglalagay ka kung kailan inspired ka, naglalagay ka every time, kahit hindi mo feeling maglagay, kahit bagsak yung market, kahit nakakatakot, kahit may masamang nangyayari, dapat yung disiplina na naglalagay consistently over the long term. Pero hindi lang yun. Kahit kumita ka, kahit umakyat na siya, kahit malaki na linagay mo, yung discipline na hindi mo siya tinatanggal. And I'll tell you this, the reason why I'm saying this and making these videos, because I know I will be historically correct that 40 years from now, lahat sa inyo na nag-peso cost averaging, your investments will do well. Why? Because putting in money regularly and not taking it out will beat someone na ginagastos lang yung pera sa isang bagay na hindi niya ginagamit.
What I want to tackle today is something that has been very close to my heart, because a lot of you guys have been asking if it's something that really works or it's something that should be scrapped from your investing strategy. What I'm talking about is buy and hold investing. A lot of people are asking, does it really work, or is it too late to actually do buy and hold investing, or at all, is it something that you should even consider if you want to invest in the market? Of course, you know me, I'm a technical analyst. I love trading the markets. I love buying and selling. I love the volatility. I love following trends. I love spotting opportunities where you can also make a quick trade. But at the end of the day also, I have a portfolio that I use for investing. That's why it's very, very important for you to segregate your portfolio. It's very, very important for you to segregate your allocation, because if you segregate your allocation, it allows you to have a style for investing and another style for trading as well. So if you're an investor and you want to segregate your funds for investing purposes, here's the thing for me. Buy and hold works eh. Buy and hold is something that's very useful, and you will see the likes of Warren Buffett do buy and hold. However, you don't take buy and hold investing also out of context. Why? Because there are certain conditions where buy and hold will work. There are certain conditions also where buy and hold will not work. So you have to understand this. If you're doing buy and hold, it has to be for the long term. Buy and hold investing is for the long term. When I say long term, it has to be a very, very long period of time. Not just a long period of time, but a period of time also that covers different cycles. Meaning, it should be more than 7 years. It should be more than 10 years. Why? Because there are certain cycles in the economy where a certain company may dip in sales, but if the company is good, it should recover, and it should have the ability also to bounce back in the future. So, long term, more than 10 years, that should be one of the prerequisites if you're doing buy and hold investing. Second prerequisite at least is the company must be fundamentally sound. At the end of the day, a company that's good, growing, and undervalued is something that you're looking for. You don't want to buy a company that's not going anywhere. At the end of the day, you have to understand this. No matter how long you hold the stock, no matter how long you stay in the stock market, no matter if it's 10, 20, 30 years that you stay in the market, if the company is not good, it's not going to do you any merit eh. That's why you have the Kodaks, you have the Uniwides, companies that are not doing well, companies that have fallen up. Why? because they're not growing anymore. They're not doing so well. So why am I saying this? Why would you want to put money on something that's not growing? So a very, very important ingredient that people try to miss out on, if you want to be a buy and hold investor, it's not just about you investing for the long term, but it's you also investing in a company that you know will be there over the short, mid, and long term, because the company is growing, the company is good, they're in an industry where hindi sila mauubusan ng customers. If you want to be a buy and hold investor, it's very, very important also that you have a larger chunk of money already and you will put it in one go, meaning you have this amount of money reserved for a specific purpose, that when you see the markets show you that there's a buy opportunity, especially if you know the valuations, when the valuations tell you that it's relatively cheap already, you put it in one go. Don't shop it. For example, you have ₱1,000,000, don't shop it na pakonti-konti, lalagay kayo, so it defeats the purpose of you being very, very, very strategic. You have to remember, when you're doing buy and hold, you must be very strategic already on how you go about your money, meaning very precise. It's something that you've studied, because you're buying something that's undervalued, you're buying something that's cheap, you're buying something that you know has the ability to grow for the long term. So look at it from an area na mura yung stock. Look for it from an area also that when you find it start to get cheap, that's when you start to come in. So with that said also, buy and hold will not work if the market is bullish.
I hope you guys got a lot from this. I hope this video gave you enough insight on how you can trade the markets with confidence, because at the end of the day, it's your conviction that will help you. And if you have any questions from this video, put them in the comment section below and we'll try to make new videos on top of it. And if you're new to this channel, please subscribe and smash that bell so you get updated every time I come up with new content about investing, about the stock market, with one goal: to help you reach your goals of financial freedom. So what are you waiting for? Like, share, and subscribe. And I hope you guys got a lot from this, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.